Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, happy new year. Today guys we will take a look at the Canadian dollar, because in the recent days at the eve of the Christmas and the New Year's Day we have discussed setups on the all major currencies, and now you know what to watch for and what to expect on absolutely different currency pairs. I mean the currencies that we have discussed: Australian dollar, Japanese yen, New Zealand dollar, Canadian, euro currency, but right now the time has come for making some brief update on the Canadian dollar, because previously when we have taken a look at the Canadian dollar in our weekly research, we still have found some contradiction in the situation that we have on the monthly chart and on weekly and lower time frames, because if you remember, on the weekly and the daily charts, we have the reversal patterns that have been formed and confirmed by the market. I mean the butterfly on the daily that you see right now in this picture, but also we have the completed ABCD 1618 pattern on the weekly chart that also creates a major resistance agreement in the monthly chart with the major 618 fib resistance level. And in general, this situation suggests that market stands at rock hard resistance that in normal situation usually leads to some deep retracement. But at the same on the monthly chart, we have another large ABCD pattern that has the 618 extension target slightly higher where market stands right now. So it stands approximately at 119, this target. And some concern that we have announced in the previous weekly research stands around this mismatch. So we said that what will happen? Either market will continue move to the monthly target first and then will show some retracement, or it will show some respect first of the current resistance and then continue move to the target around 119. And on that date, when we have prepared this research, we wasn't able to answer on this question because we have a lack of information for that. But presently, Canadian dollar has shown some progress, and that led us to take another view on the current situation that gives us some hints what to expect in the nearest future. First of all, as we know that the Canadian dollar mostly the crude oil currency, we should take a look at the crude oil in the monthly chart. Recall what we have discussed previously. We have this large A, B, C top pattern on the crude oil. And we said that market already has hit the 618 extension target at 16 even area. Market had oversold. But take a look what we see right now. Market is passing through this area. It has broken through this target without any respect. So if you'll take a look at the weekly chart, you'll see some pause here. So that was the hitting of this target, just 2 weeks of the consolidation around, and on the next week, on the current week, you can see the market is continuing to move down. The daily chart, this consolidation stands a bit longer. Okay, you can see this flat action without no retracement attempt on the moving high was pressed by the market. As you can see, these long shadows here, this downward continuation has followed. So with these circumstances, it's very difficult to count on retracement on the Canadian dollar. That's why this situation makes us think that market probably will show some move up on the Canadian dollar. And right now is not the time to take any short position. So we need to wait a bit more. And right now, if we said that we wouldn't have this target on the monthly chart of the Canadian, we could say, yes, that's just perfect. We will start the preparation for taking short position. But the existence of this target and recent price action on the crude oil makes us think that we should sit on our hands and wait what will happen. it really a high probability that some upside action on the Canadian dollar will follow soon. But the strength of this continuation is still the question, because if you'll take a look at the daily chart, so right now we could say that Canadian dollar mostly the hostage of the geopolicy, and you could see on the daily chart, this is our completed butterfly right at the Fib resistance and daily overbought. But take a look what is going on. This market stands flat. Trend has shifted bearish, okay, but market stands flat. It could be the sign of the bullish dynamic pressure. The bullish dynamic pressure has the minimum target. It suggests the taking out of this previous top. So that's why currently it's very difficult to say whether the market will just continue move higher following the crude oil, but it shows the portion rinse of this top and reaching of this maybe upside border of this channel, okay, and then turn to the downside. That's also possible. This probably will stand in the tight relation with crude oil. So if we will get some retracement on the crude oil here, maybe Canadian dollar also will respond correspondingly, will answer correspondingly, and also could show some retracement down. But that will be later. Right now, it's not the time to take the short positions, because this is the indication of the possible bullish dynamic pressure and possible move, at least to take this stop. At least. So maybe the action could become even greater. On the 4-hour time frame chart, we also see some bullish signs. So you can see that market, that was our triangle that we have discussed previously. You can see the market has broken and down. But take a look, it taken the shape of the sideways action. So market just has reached the weekly pivot support one. So weekly pivot support one holds the retracement down, and right now it has returned right back up above the weekly pivot point. Okay, so that is in general bullish sign. So you can see that market stands above the weekly pivot support and hasn't even reached the minor 3/8 support here, as you can see from this area. Okay, so here we do not have the bullish divergence. Maybe if even we have it, it's really very small. So here is the number 7.64 MACD, and here is 6.826. Yes, we have some very small bullish divergence with this MACD, but it's really very small. So it's not even, you even can't get the angle of this by the eye, so that's mostly just by the numbers you could get the existence of this divergence with this. Okay, so here, well, that's also maybe some sort of the confirmation, but I prefer to get the more bullish, a more steeper divergence when I am looking for dynamic pressure. So anyway, that could become the dynamic pressure, and market could take it out to this top. Following the normal, the classical rule of the trading sideways consolidation, the most probable target of it is the distance, the width of the channel of this sideways consolidation counted to the upside. Usually market doubles the width of the broken sideways consolidation, and it stands approximately at 1740 area. So that's probably will be the target that market will reach if we will be right and market and really the bullish dynamic pressure exists here, and market will really follow to this pattern. So that's been said, that's our current view on the Canadian. Currently we come to conclusion that it's not time yet to take in the short position, and market really could stand in the forming of the bullish dynamic pressures that suggest another upside action, and the minimum target of this action will be this top, but very probable that market could hit as far as 1740 area on the Canadian dollar.